Let's start with a number nobody in Washington wants to talk about because it does not fit on a bumper sticker. 131.543. That's the federal index for commercial auto insurance premiums as of July 2025. An all-time high. Not a chart going up a little, not a blip, an all-time record. If you run a truck, that number is your mortgage, your kid's school, and whether you can afford to keep the lights on. It's the producer price index for commercial auto insurance, and it just set a new ceiling. Why is it happening? Premiums are climbing because the costs behind every claim exploded. Medical bills, newer and pricier vehicles, parts that cost more and take longer, and then the courtroom jackpot machine. The nuclear verdict culture, ratcheting everything higher. Even the expectation of new tariffs on trucks and parts is already getting priced in by underwriters. And the payouts that used to settle for 5 figures, they're settling for 3 or 4 times that now. Before you ever get near a jury. It's not just vibes. It's showing up in the insurance industry's own scorecard. Commercial auto is the stubborn problem child of US insurance. The commercial auto combined ratio is roughly 108.5. Translation: for every dollar taken in, about $1.08 went out. You don't need an MBA to know what that means over time. Premiums get hiked, coverage gets narrowed, or carriers retreat. Usually all three. And there is more pressure building behind the scenes. The total amount of premium sloshing into other commercial auto liability jumped nearly 13% in 2024. A huge move in a mature line. That is not because risk magically disappeared. It's because the system is repricing risk higher fast. So who pays? You do if you haul freight for a living. Eventually, all of us do. When the cost of moving groceries and building materials gets baked into the bill at the cash register, industry cost reports have been warning for 2 years. Total cost per mile hit a record in 2023. And the line item that popped the most was not diesel. It was insurance premiums, up double digits per mile even as fuel eased. In 2024, the average cost per mile held near a record range. The insurance spite didn't suddenly go away. Now, you'll hear a familiar defense from the lawsuit lobby. These are just corporations being held accountable. But that's not the story if you actually drive a truck for a living. We're not talking about Exxon or Apple. We're talking about one-truck outfits that need a clean year just to break even. And that courtroom pressure is not just theoretical. Remember Operation Sideswipe in New Orleans? Staged crashes targeting semis, dozens of defendants, guilty pleas piled up, even a federal witness murdered. You think that does not filter into how insurers price a claim in Louisiana or in the next state over? It does. Fraud plus litigation risk equals higher loss costs, which equal higher premiums. Meanwhile, the cost drivers keep stacking. Medical inflation pushes bodily injury claims up. Parts and replacement values on trucks and on the cars they hit are pricier. Underwriters are bracing for tariff-driven parts inflation, and even in cases that don't hit those headline-grabbing nuclear numbers, settlements are materially larger than 5 or 7 years ago. This is not a single bad actor or one greedy company. This is the entire ecosystem repricing risk because the inputs got more expensive, the courts got more unpredictable, and the fraudsters learn how to game the system. There is also a quiet accelerant almost nobody outside the industry discusses. Third-party litigation funding. Hedge fund money now bankrolls plaintiff cases, often in secret. That cash helps cases go longer, resist settlement, and inflate demands. Without basic transparency on who's bankrolling a suit, you're not even negotiating with the real counterparty. Several states have started moving to regulate disclosure precisely because this hidden leverage is wrapping outcomes and costs. If you want proof this problem is system-wide, not a one-off, look outside trucking at the broader commercial lines market. The insurance industry overall had a much better 2024. Commercial lines posted an underwriting profit, but even in that good year, commercial auto remained an outlier with losses. When everything else cooled down, this line kept bleeding. That tells you something fundamental is broken in the risk and legal environment around trucks on American roads. And the reinsurance backdrop, essentially the insurer's insurance, has stayed tight. After the cat losses of recent years, reinsurers forced tougher terms and higher costs. The 2025 renewal season remains firm, especially after late 2024 storms. That pressure funnels right back into primary premiums, including commercial auto. So no, there is not a magical down 30% next year switch. The market plumbing won't allow it. Let's talk about people in the blast radius. The owner-operator with new authority is the one who gets crushed. High risk, little track record, often quoted at numbers that would make your eyes water. Shop around and you might shave it. Year 2, year 3, it may ease, but in an environment where the baseline index is at record, even the best shopping feels like haggling over the last deck chair on the Titanic. And if you've got a blemish on your safety record, true or not, it follows you into the renewal room and adds dollars to the bill. The point is simple. The risk pricing machine is working exactly as designed, and it's not designed for mercy. So what do people who actually run trucks do? They adapt or they close. That means dash cams and telematics not as gadgets, but as legal armor. It means ruthlessly presenting your operation to underwriters like a top-tier borrower to a bank. Loss runs ready, safety program documented, driver vetting tight, equipment maintained, lanes explained. In a market like this, presentation can be the difference between a survivable renewal and a business-ending one. And yes, it means shopping, because underwriters don't all price risk the same way. Some will value your data, your discipline, your route profile. Others will just see a DOT number and a radius and slap on a surcharge. Find the former. But pretending this purely an owner-op problem is dishonest. It's policy. In Florida, lawmakers rewired the tort landscape in 2023. Shorter filing windows, modified comparative negligence, changes to one-way attorney fees. That fight is ranging in other states too, often around one basic principle. Should the money behind a lawsuit have to reveal itself? Should juries hear realistic numbers rather than fantasy anchors? More states are moving toward disclosure of litigation funding. Even risk managers outside trucking are pushing for it because the current fog drives up costs for everyone. There is nothing radical about transparency. It's called sunlight. If you want the simplest explanation for why your premium doubled, here it is. You're paying for 3 separate Americas at once. The America where fraudsters staged crashes into semis for quick settlements. The America where lawsuits became an investment product. And the America where a single misstep can trigger a jury to set fire to a business. Insurers are not charities. They do math. That math says, charge more, and then the premium notice lands in your inbox. Were there green shoots? Maybe. Freight demand shows signs of life after the long downturn. If rates recover into 2025, some operators can spread these fixed costs over healthier revenue. But that's hope, not policy. You can pay bills with hope. Stability on the insurance side requires structural fixes. Funder disclosure, sensible venue reform, guardrails on interest and fee games, and a crackdown on crash fraud with real prison time, not headlines. Make fraudsters famous for the sentences they serve, not the checks they cash. Here's the uncomfortable truth. If you like low prices at the store and fast deliveries at your door, you live off the back of a trucker. And right now, we're pricing those people off the road. We did it with rules written by people who've never thrown a strap in the rain, including me, with courtrooms turned into casinos, with a media that thinks nuclear verdict is a clever phrase rather than a wrecking ball through small business. If you wanted to consolidate the trucking industry into a handful of mega fleets, you do exactly what we're doing now. Raise the fixed costs so high the little guys can't clear the bar. Watch them sell their rigs to the big players who can afford the lawyers and the actuarial teams. Then pretend that was the free market. It isn't. It's policy by neglect. So here's what accountability would look like in the real world. First, full transparency on litigation funding. If you're bankrolling a lawsuit, put your name on the line. Courts and juries should know who stands to profit. Second, fast-track felony prosecutions for staged crash rings with federal sentencing enhancements when conspiracies target interstate carriers. Third, require that damage demands at trial reflect real costs, not fantasy anchors designed to shock a jury. Fourth, incentives for verifiable safety tech, cameras, telematics, collision mitigation, with regulators pushing uniform, privacy, respecting standards so insurers can actually price the benefit. None of that is anti-plaintiff. It's anti-extortion. And to the industry, control what you can control. Document everything. If you don't have outward-facing and driver-facing video, you're playing Russian roulette with your livelihood. If you don't have disciplined driver onboarding, you're subsidizing someone else's bad hire. If your safety program lives only in a binder for audits, it doesn't exist. Bring it to life with real training, real corrective action, real data. When the renewal comes, walk into that room with a story that your underwriter can defend to their boss. If you don't tell your story, a plaintiff's lawyer will tell it for you. That's the world we live in. Look, the press release class will say the sector is doing fine. They'll point to a better year for insurers overall. True, and irrelevant to your bill. Commercial auto is the sore thumb on a good hand. The data says premiums are at records. The trade press says costs behind claims are up. Analysts say commercial auto is still losing money. And the docket in New Orleans says fraud is not a theory. It's a conviction. That's the case. You can hate it, you can shout at it, or you can fix it. But you can't afford to ignore it anymore. If you run a truck, you build this country. If you write the laws, maybe try acting like you know that. If this spoke to you, push it out. Send it to the state house, the courthouse, and the guy who thinks freight just shows up. And if you're a small carrier fighting to make payroll, this channel's for you. Subscribe, drop a comment with that your renewal looked like this year, and tell us what worked to get it down. The more sunlight we throw in this, the harder it gets to ignore. We'll see you next time. Bye-bye.